Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Australians are interested in investing in crypto, but still lack the confidence and knowledge to do it. New research by Finder and global crypto exchange Coinbase shows that not understanding how crypto works is still the major barrier to investing. It also shows the need for regulatory certainty, with many believing the federal government is too slow in implementing regulation in a rapidly evolving ecosystem. John O'Loughlin is the Managing Director, APAC, at Coinbase, the largest cryptocurrency exchange in the US. Remember, this is general information only, and you should always seek professional advice before making investment decisions. John, welcome back to Fear and Greed.
Great to be back, Sean. I think this is our third session with you and the team, and delighted to dive into this really exciting report, some of the first proprietary research on the space for a long time.
Fantastic. Okay, so let's jump into it. The Consumer Cryptocurrency Report is a big survey, 3,000 people across the country. Broadly, there's an appetite out there for more information about crypto, John.
Yeah, ditto, Sean. I think we've seen this even prior to the crypto winter. I think when we did our first podcast with you, we were relying on a very limited amount of bespoke proprietary research on the space. So I think that's why this co-branded with the Finder team is even more kind of pressing and important. Number one thing still at the top of everyone's mind is trust, and having that reliability and ensuring that the exchange or that the group that you're operating with, the broker, et cetera, is trustworthy and reliable, and there's going to be recourse if things happen, untoward events. And that's something that's very much kind of in the Coinbase wheelhouse as a publicly listed company. So that kind of factor has increased, and that's not surprising given the post-COVID era and the absolute kind of tidal wave of scams across all things, whether it's platforms, social engineering, telcos, banks, neobanks, etc. But that's something that we take incredibly seriously. So that's just becoming even more important, and something we talk to regulators about on a daily basis. I do think what we touched on in our last discussion around the ETFs, that has brought at least one of the tokens or digital assets right into the mainstream. But once you have that in your portfolio, then you want to kind of delve deeper into this asset class. And I think that's what we're seeing, a little bit of a move around in terms of the different demographics and age breakdowns that are interested in crypto. Yep, surely it's the digital natives who are younger, but we have seen pretty serious increases in terms of boomers, and millennials are right up there with Gen Z. That boomer audience is being driven by the Gen Zs and the millennials. But, once they've done that big placement, which is probably a hold with an ETF in a couple of stocks, much like gold or any other classic diversification panel I have, we then get kind of quite interesting inquiries from these users. And so, that learning journey is just beginning for, the bulk of the market.
Okay, there's plenty to unpack in that answer. I want to come to who's investing in them. But just before we do that, so security is a big issue, a big impediment to people. And if they're confident about who they're investing in, then they're more likely to invest. What are the other hurdles that people have got to overcome, just before we get to who it is that's actually doing it?
Yeah, so with that security and reputation, that's clearly first cab off the rank. And so I think we kind of tick that box for a number of people. The next decision is, how do you want to trade actively? Do you want to delve into a portfolio of tokens or assets? And then, even going on that journey itself is a very active kind of trading journey. And so I think that's when, a whole lot of the educational information kicks in terms of learn and earn campaigns. And we hear repeatedly from people, and in a lot of this research as well, that educational aspect is kind of learning by doing.
Yeah,
I think these younger generations, as you've seen, even with the ETF journey, people spend a vast amount of effort looking into which ETF they're going to use, which provider. It's not only about cost. Clearly cost is part of that. But from when we started the ETF journey, when there were a handful, to now literally hundreds, and then domestic Australian ETFs. This initially started as a kind of American phenomenon. We see that kind of expansion of that journey. And I remember even myself as a younger guy earning a little bit of money, having a bit of spare cash around. I made some errors on my own ETF journeys in terms of where they were domiciled and what I should and shouldn't have been doing. So I think we're at the same state and that early part of the journey in terms of Bitcoin, ETH, Solana, Polygon, etc.
Those ones that you just mentioned there, and particularly Bitcoin, they are the largest and most popular. Is it fair to say with that comes some security as well?
Yeah, certainly. I mean, look, the household names in the investment management industry and wealth managers, and even the super fund in Australia, or rather the future fund, has an allocation for this asset class. So I don't think that's going away, and there's broad concern about the legitimacy of that asset class in terms of liquidity and the future of it. Ethereum has a very different utility play, and I was at a hackathon a couple of weeks ago in Sydney. Hundreds of highly educated, far more intelligent individuals than myself from all the top computer science schools and engineering departments, and people flying in from all over the world to be involved in what was called a global Ethereum event. And so during that time, I think there's just an important thing that people on the street probably don't appreciate. There's a number of projects going on in terms of how can you use Ethereum as a utility across all sorts of areas: intellectual property, art, digital and physical art, different payment rails and payment uses, remittances, how to speed up payments and broader kind of financial systems, and a lot of things around gaming. Remember the gaming space in terms of the computer gaming space and the Fortnites of the world, etc., is bigger than all other digital media and television combined. So these are kind of the applications that the blockchain are having an effect on, and they're being driven by this next younger generation. And so that's really the Ethereum space. And then there are a number of projects and tokens that interlay with Ethereum. So I think that's the next big space people are learning about. And I was, personally reassured to see a number of people my age at this event. Some of them are veteran hackers, others of them are veteran investors, and a lot of family offices, and I would say some of the smarter money in Australia looking at this as well. So that is really, much like the kind of VC world, learn by doing.
Yeah.
And I think we've kind of democratized that in many ways with blockchain and being able to learn and earn on these platforms.
Stay with me, John. We'll be back in a minute. I'm speaking to John O'Loughlin, Managing Director, APAC at Coinbase. Okay, so let's move to who are investing, and you're sort of alluding to it there. You talked about baby boomers potentially following millennials into this market. I'm just interested in kind of delving into that a little bit more. I presume baby boomers, a lot of them will be retiring and have money to invest as well. I suppose I'm trying to get proportions about who's putting money into this area. Is it still mostly a millennials world or a younger world, or not?
Yeah, no, not necessarily, Sean. So let's just dig into some of these stats from the report itself. We're assuming that 27% or over a quarter of the population have owned crypto in the last 12 months. And so therefore, off the back of the crypto winter and some people maybe being not active in the market, we can assume that number's north of that for total ownership. So that number in terms of last 12 months activity is 5.6 million Aussies. The breakdown in familiarity within those groups of the age breakdown is Gen Z, 60%, familiar and high awareness. And that really is, these digital natives. Right after that, and just slightly more elderly, millennials, and millennials make me feel young with 57% familiarity. And then boomers at 39%. That may sound like quite a kind of gap from 57 and 60% to 39, but this cohort, as we mentioned on our last podcast, their allocation in terms of, let's say, an ARPU or the amount of money they're allocating to their portfolio is usually, 5 to 10 times what those youngsters are putting into the allocation. And we're all very aware of the wealth transformation and the huge shift going on in Australia as this demographic ages and cashes out of property and an incredible period of, economic growth and prosperity. But that they have an outweighted effect just due to the sheer amount of capital they're putting to play, even if that's a 50 basis point or 1% allocation, which is still a classic conservative portfolio diversification play. That's not going backwards.
And also, I just want to quickly, because we're running out of time, but regulation, the report talks about regulation and the need for regulatory oversight and regulatory certainty. It is very difficult, though, for regulators to keep up, in a sense.
Look, I think we've seen this with other regimes, and we're in a transition period.
Yeah.
We know that ASIC are going to be an incoming regulator. It's quite certain that this will fall under an AFSL regime. And we just have to be careful in the interim about, is the regulator really pushing cases for the sake of pushing cases and testing the law? And will that retard or slow down or govern really important innovation and activity in the technology space in Australia? Because we have a lot of leading companies in this space, and there have been some, pretty tricky and pretty curly cases around this. And so while the law is not perfect, the existing securities regulation has very firm meaning. So the sooner we can get to draft legislation, and this may be as soon as late November, December this year, which we're all hopeful for, given some announcements in Canberra in recent days and weeks, the better. And that will provide that guidance to people. But look, Australians, particularly younger Australians, do not have confidence in the oligopoly and the historical banking systems, the costs involved, the concentration of power. And that's very about Coinbase's mission overall for financial freedom. It's something we're excited to be part of, and a lot of humility being in the Australian market that is, really advancing quickly.
Fantastic, John. Thank you for talking to Fear and Greed.
Thanks, Sean.
That was John O'Loughlin, Managing Director, APAC at Coinbase. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.